Hello guys, good morning. In this video, I will try to explain something about day trading because a lot of people they want to do day trading. So the pros and the cons, it means the advantages and the disadvantages of day trading. So we begin with the pros, which is the advantage. Um, so the trade, you do the trade during the day, okay? So this is one thing. So you know if you have like profit or loss. Now day trading, you can day trade using the chart for like 1 minute or 2 minutes, like let's say 1 minute, 2, 5, if 10, 15, half an hour, like 30 minutes, or 1 hour. Okay, so let's see in the chart. Okay, now this is the chart of Facebook. This is the day, it's July 31st. Okay, the day starts now. This is here yesterday. The stock was 37.63, and it starts today with 37.98. It means it's nearly 38. It goes a little bit 38 something, 38 31, and then it goes down to 36.33, and now it is 37.07, and it is now, what is it? It is 2:48 p.m. Okay, we have like 1 hour 12 minutes before the market closes. So so let's see here. You can go here. I'm doing like 15 minutes trade. Okay, so you can buy and sell. You see all this all these candles. Now the day it was good, but then each 15 minutes it's good or trading in a range, and then it goes down and then it goes up a little bit. Okay, so here is 15 minutes. Now you can change it to 1 minute. This is 1 minute, 1 minute chart, as you can see here, and you can change it to 2 minutes. You have 3 minutes. You see, 3 minutes. Each one of these candlesticks is 3 minutes. Now you can have 10, 15, 30 hour, 2 hour, 4 hour. Okay, 4 hours. So 2 hours here, and 4 hours here, and 4 hours here. Okay, so this shows you the trade. Now this depends on you. You should choose the time that it is you are comfortable with. Some people they can be more patient. They can do 4 hours. Each 4 hour we have candlestick, and you wait 4 hours, or 2 hours, 30 minutes, 10 minutes, depending how quick you are. Okay, depends on how quick you are. Now, let's see here. So here I find three. You can do whatever depending on the chart that you use. Okay, the first thing is you trade during the day. It means you don't leave your trade overnight. So no overnight. Now no overnight Most of the time this is good. Why it is good? Because you don't want to see things that happen and you don't know. Okay, so for example, the stock is 37. Okay, and tomorrow it begins with 23. Okay, so you will have a very big loss. So in order to avoid this fluctuation in prices, so the day traders, they don't want to let their trade to tomorrow. So their account should be in full by the end of the day. They should sell all what they have. Okay, so they always work in the day. They buy and they sell according to the market, and when the market ends, they just stop. Okay, they want to see their trades and to follow them. Now this is one good thing, because they don't want to see surprises. Okay, they will have no surprise because they see the price and they are always uh, near the screen and they follow. If it is one minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, it means they are there always. Okay, and this is one of the good thing about the pros of the thing. Um, they can win and lose a lot of money. Okay, although it is just a few hours or few hours, they can lose and they can win a lot of money, and all the trades they know by the end of the day, they know if they have done good or bad. Okay, this is the pros. Now, um, the cons of this, it means the disadvantages. One of the main disadvantages is commissions. Okay, commissions, it means if you do a trade, let's say buy, okay, $5 plus sell $5. Now you end up paying $10 for each uh, for each round the trade. It means you buy and sell. Okay. Now $10, you see it as little, but let's see if you do, for example, 10 trades. Okay, 10 trades, you lose like $100 loss. This loss is just from commissions. Okay, it is not from your trades, and depending on your capital. Okay, most of the day traders, they have a big account. Okay, what's the big account? It's the minimum is $25,000 for an account, and most of the day traders, they have what you call margin accounts. Okay, it means the broker gives them 25,000 more. So these guys, they can trade like 50,000 in their accounts. Okay, um, the interest rate. Now for the margin account here, I say there is an interest rate, for example, 4% each month. Okay, let's say 4% each month. Okay, so this is one of the most important thing in the. You should have a margin account. Why margin account? Because in a cash account, if you have a cash account, you can do day trade, but you cannot do short selling. Okay, if you want to go and short the stock, okay, they will not let you do it. Okay, so these people who are doing like day trading, they are, most of the time, these people are professional. Okay, their game, the game they play, is with beginners. As I told you before, if you are a beginner, it's very hard to compete with a professional. Okay, because the professional have more money, they can short the stock, they can do a lot of things that you can do. So you may because beginners, they can go long, they cannot short the stock. You should have a margin account, and you should have at least $25,000. This is the good thing about thing. It means, in order to be like a day trader, you should be at least a professional. It means you know what you are doing. Now, we say the cons, the commissions, and I can add another thing, is losses. You can have a lot of losses if you don't know how to trade. Okay, don't know how to trade, you will have a lot of losses. And this, if you see your account, if you are like you begin like a day trader, because I see some people who are beginners, they begin day trading, they don't know how to trade, they don't know how to make the plan, don't know how to make a plan for their trade. Okay, some people, they are just naive. Okay, some beginners, they say, are naive. They people, they tell them, oh, okay, you just have some money, you buy here, you sell here, you will have money. Okay, $100, $200, $1,000. I don't know how, from where did they give this money, but they don't think about the disadvantages. It means if you don't know how to trade, um, you don't have experience in time, so experience is a disadvantage. It means no experience. They, for example, when they do the trade, they hope and wish the price goes up, and this is gambling. In trading, you shouldn't wish and hope. You should make a plan and follow it. If you are making money, you stay in the trade. If you begin to lose money, you should have what you call stop loss, and you exit the trade very quick before you have a very large loss. Okay, so these are some that I highlight here. And some people, other day traders that are professional, they have what you call level 2 uh, broker platform chart software. Okay, I will explain what's this software. Some people, they ask me about this level 2. Level 2, it gives you, for example, when you don't use level 2, you see, for example, the bid, and here you see the ask. Okay, for example, if you want, let's take it up here. Okay, now the bid, for example, it is 37.25, and the ask is 37, for example, let's say 30 cents. Now here, the ask, it means they ask you if you want to buy. You buy from this and you sell from this. Okay, let's say here, you say here, you sell. If you have you have some shares, you sell here, and if you want to buy, you buy from here. Okay, now what is level 2 broker? Level 2, they don't give you one bid. Okay, they give you a lot of bid, like this. For example, 37 24 cents, like 37.20. It means you will have a lot, and depending on your like 30, like here for like 29, just an example, and here like 37.28, just an example, I make. And the thing that you can see in level 2, you see a lot of bid and a lot of ask, and you will see something that very very important. You see here, let's say, you see the number of shares of the bid. For example, let's say uh, 4,000 shares. Like when you say 40, it means 4,000. Okay, I put it like this because in the platform, for example, when you see, for example, 2, it means it is 200 shares. Okay, 200 shares. And let's say here 200 shares. Now 200 shares, for example, the ask we have, for example, 200 shares also. Just an example. Now sometimes you see, for example, 40. It means, okay, it means 4,000 shares. It means some people are offering, if you want to sell, there are more shares, okay, to sell, or there are more shares to buy. Now this balance here affects the price, so people see how many shares are offered, like for the ask, and how many people are selling. If the selling here is more than the buying, it means that the price goes down. So the day traders, they know previously, they have an idea where the price is heading. That's why they buy and they sell according to this level 2. That's why it is professional. Now if you don't have this, for example, some people here, they put 40, someone here like 40,000, he is selling 40,000 shares. Okay, so you don't know. Okay, when you have the you, if you don't have level 2 platform, you don't know that someone here is selling a lot of shares. Okay, like 40,000 shares here, so the price must go down. So the other professional who knows that this, they do what? They short the stock very quick. They stop here from going long, they short it. But you don't know, so you lose money. That's why, okay, that's why you have problem. You have problem with that. So the conclusion that I will tell you here is that you should always think about the type of trader you are. If you want to do like day trading, so the good thing is you will know that you lose or you win, and you will see your money, for example, in the account at night. You don't leave your money at night. So your account is full of your money, so you don't have surprises in the morning. The surprises could be bad, it could be good. Okay, so you always work in the day, and you don't leave your money to the market at night. Okay, so please, if you have any question about this, about day trading and so, please write down or ask me questions and comment. But I will tell you something, that day trading are for professional. If you are a beginner, it trade just little bit of your account. Let's say, for example, you have $10,000. Try just to use 1,000 or 2,000 in a trade, in one trade. Okay, don't use all your money in one trade, and you are a beginner, because if you lose a lot of money, your your account will be less and less, and then you cannot trade anymore. And they say, this is the saying that Wall Street says, that the beginners, this happens always, beginners, they can lose almost their money in 6 months. Okay, to 1 year, if the guy doesn't do a lot of trades. But those who trade a lot, and they don't know how to trade, in 6 months, if he has $10,000, maybe he will have at the end 1,500, and he cannot trade anymore. Now, when the people, they don't know what to trade, where do they go? They go to penny stocks. They think that because they have little money, they can buy these penny stocks. Penny stocks are cheap for a reason. Okay? Now you should do your homework. Why? Why the stocks are called penny stocks or pink stocks, or cheap stocks? It's cheap because the company is cheap. It doesn't make money. It's no more earnings. There is a lot of competition, and it's a very very small company. That's why people, the mutual funds, the big guys, the people who want to invest, they don't go to this penny stocks. You are lucky if you can make some money in this penny stocks, and most of the time it's very risky. You can lose almost all your money in one trade.